So what up guys, this is your boy CFX Sniper, and today I'm showing you guys how I do my top-down analysis of any forex market. Basically, I'll be showing you guys how I plan to take trades, how I execute, all the trades. And today I'll be working with EURUSD. So without wasting any time, let's get into it. So this is a monthly time frame of EURUSD. And for those who don't know, I trade based on supply and demand trading mixed with supply. I mean, smart money concept and liquidity, obviously. So first of all, I start with marking all the most important zones, which is supply and demand zones of a given high time frame. So it's advisable to start with a higher time frame when you do the top-down analysis. So you always, get the sense of, the direction that the market is going. So you know where the market will be heading for the next month or the next week or the next whatsoever, depending on the time frame that you've chosen. By the way, that is supply and demand zones that we are currently that the price is currently ranging within. And we have another zone here as well. There was a demand here, sorry. We have demand here. We have a demand here. So now we can see that price has been rejecting above the zone for a while. So this right here is what I like to call liquidity, where liquidity basically is when the market makers are trying to induce people to actually buy before time so that they take you out, and then after they take you out, then the market does whatever it needs to do. So first it will bump, it will tap, because you can see this almost tapped for 3 times. So a lot of people are getting in and see the confidence to buy the market, whereas in actual fact the broker, I mean the market makers, are just building liquidity so that they will take out everyone who's a buyer here, and then after they take everyone there, when everyone starts selling, they push the market down again. So that is what it's all about. So there's a lot of liquidity here, a lot of liquidity, and they are way above those the demand zone we have here. So that is highly probable. You can also see a nice descending channel, a nice trend line. Yeah, we can connect it to line. Can connect the trend line. Some people choose to do it in certain ways. I don't trend based on trend lines. I just use it to keep the trend. So I like to just keep it where it started, where the whole trend started, which is right at the top, and then connect it to the bottom. Or yeah, the line that makes more sense that we are connected to, which is, I just keep it so, and then I drop it right at the demand zone, and then at the same time I can see there's something happening here. Yeah, let's just leave it here. Not necessarily don't trade based on the trend line, it's just there to guide us. So this right here is also liquidity, because this is where people take their sales all the time, of which the market makers will want to first clear liquidity before making an actual move. So this is just both liquidity pools, and then for the monthly time frame we're basically done. So we can move on to the weekly time frame. What can we see? What can we see? What can we see? Oh wait. So starting from starting from here. So we had a demand zone. Yeah, price pushed to the downside with a very strong had a very strong bullish movement. Yeah, so we were waiting for mitigation upon this zone. Price came back, it didn't give us mitigation. However, it left the zone here. That was it left the zone here, and then we weren't sure what that zone is gonna hold, if we're gonna trade from that zone yet. Simply because when the price was still around here, we didn't know much of what's gonna happen next. So we had supply zone, and then from the moment this low here was broken, that's when we decided that okay, we actually have a true supply zone. So once it broke the structure, and then started looking for cells towards here, and whatever cells we take are gonna take you straight to then the opposing zone, which is the demand zone, because we didn't necessarily we're selling here. So since we get that, we got that break of structure, we took a sell from this position, stop loss above that high, take profit, and yeah, take profit is on the demand. So technically, obviously, you wouldn't take a trade like this because it's too much of a zone, it's too big. But since we're based on the 1 week time frame for now, this is how you would take your trade if you are based on 1 week. In a 1 week, yeah, that's how you would take a trade and getting confirmation and stuff. But the way that's a story for another day, because we're not busy with entries now. So yeah, you would have got your trade there, and then market goes, boom. So yeah, some people would say, okay, you had a zone here, why didn't you pick it? Because of market turn. Well, this is not a valid zone for us. This is not a valid zone for us. Simply because this zone achieved nothing. It achieved nothing for us. It didn't break any major structure. So it was just a place where we were waiting for pullback so we can keep we can keep selling for a continuation. For example, so market created all this range here, left this candle, but reacted off this candle, then this candle broke this. So this reaction showed us that this is some type of demand in a lower time frame. So whatever happened here in this candle must be a supply zone. Yeah, this must be a supply zone, simply because it broke this zone here, and it didn't only just broke this low, it broke this low, it broke this low, and then it mitigated this demand. Well, that zone wasn't a valid demand. So whenever price comes back to that zone, we are looking for sales, and as you can see, it was a sniper entry. Still, take profit will be the next demand zone. So floating around, I don't know how many pips now. I don't know, it's too far. By the way, so that is it for the weekly time frame trades that we would have taken. In the weekly time frame, I'll go to other charts. I'll make another videos to show how exactly to verify entries and all that stuff. So I will, and again here we had this beautiful range, and then we had a push to the upside, breaking all the necessary highs. This broke this high here, we broke this high here, so this makes this zone a valid demand zone. This makes this zone valid because it actually broke whatever zones we had up on the left, whatever zones we had, it broke. So whenever market comes back to tap here, we look for buys, and buys took you to the opposing zone as well. So it's all about the order flow. It's all about following the order flow. You can see supply here as well that got respected actually that week, but I'm not gonna refine any zones. I'm just gonna keep the zones big as hell Google. So yeah, uh, from this zone we sold. The reason why we sold is because whatever happened here, this zone broke these two lows, and this was demand, so it broke demand, meaning that was in play. Sold from this zone with confirmation. Obviously take profit would be still the low, because we know that the main zone that is in power is still the big supply that we created here. The moment we start breaking to the upside, then we know, okay, we have a shift in price action, but for now we can see the market is still bearish. Sure, so we'll just keep continuing going to the downside. Well, so away. So I think that's it. That's it for the weekly time frame. Let's move down to the daily time frames. This is nice. So now going down to the daily time frame, I'm looking just at this demand zone that we already drew here. Let us check if we can refine that zone. We can refine this zone into this small zone here. So this is now less pips, higher risk to reward, because whatever amount you're going to be risking now is even far less than what you were risking if you had no bigger pips. It allows you to get this allows you to get a higher risk to reward ratio by using higher lot sizes, depending on the percentage obviously, but we'll have another video about risk management and all that stuff. So let's look at this entry here. So first of all, we had the zone, we had this with tab. So if you like to be a bit aggressive about it, you can have a limit right away. It comes when it taps automatically. The first day it tapped, took your limit, place your stops just below the zone, and then well, because it's counter trend, I would advise to use the opposing zone as a take profit point, because it's counter trend, and it's not the major one, it's just the diet one. I like to call it a diet one. It's in the middle somewhere. By the way, it's always great to check for take profit points that are basically supply or demand zones that are opposing. So you could have just easily set a limit, taps you, and then zero drawdown right there. Well, yes, drawdown, but you still sniper in. Or you could wait for confirmation, which is what I'm about to show you guys on 4 hour. Please don't move away, please don't move, please don't move. I really hope we can reach that data feed now. I just hope and pray we will reach that data feed. Doesn't look like we are reaching it. Oh, away. Yeah. So, hey, I'm back. Yes. So what we do here, we all know that price is fractal. Well, just if you didn't know that price is fractal, now I'm telling you that price is fractal. What I'm trying to say when I'm saying price is fractal is that whatever happens on the bigger time frame happens on the smaller time frames as well. So here we will try to pinpoint exactly. We still do supply and demand again. So we have, for instance, whatever happened in this area didn't break this high, came back, and then whatever happened here broke that high. So that would mean that we have a demand zone right here. We have a demand zone right here. So whenever we come and tap here again, we will come back, and yeah, we'll set a limit to have a buy there. And the nice thing is this, why it's so valid, just because it broke this high, mitigated that demand zone right there. So it broke multiple structures. That's what makes it valid, or at least it will give us proper um a proper entry. So if you trade based on a 4 hour, you could easily just place the limit here, stop loss here, and then take profit the opposing one, and then probably you'd this is break-even points. So wherever you break a mini structure that is against us, opposing us, that is your break-even point in case the market decides to go otherwise. So that is the break-even point. So the moment the price reach there, we take our stops, put them into end. So we are running a risk trade. And then what happens? Price comes back. And why does price come back? Because while we were entering the trade, we also left another zone. We left another demand zone simply because we had a reaction from this zone here. We had a reaction, meaning there is a bit of supply in that zone. There is a bit of supply, but it was broken. So what broke this zone? This demand. So again, while your other trade is on break even, could have easily just placed another limit when, as soon as the price breaks that zone, place a limit here, and you just wait for price to come back, and then just like that, price tapped and went skyrocketing. So that's now the third trade. First trade is running. First trade currently is running already. Break even long time ago. Second trade break even. Third trade break even, and then we just all take profits. All take profits lead to would have been a millionaire here, ne? I wish I was not trading forex back then. At that time, was probably still a baby. I'm joking you, never. By the way, that's yeah, that's That's nice trades, right? That's nice trades, right? So sometimes you can even go further to the 15 minutes. I go to the 15 minutes to take trades and stuff. But the point of this video is just to show the top-down analysis of the general market. And remember now, the only reason why we are taking these trades is because based on the daily time frame, we were very close. We're really in a zone. So that's the only reason why we started looking for buys. And we started looking for buys towards another daily supply zone, which is what we drew here. It is the only reason. Otherwise, if we were here, we wouldn't buy. We just let the market be. Just let the market be. And then as a result, all our trades reached take profit after I don't know how many days that after 300 days. Obviously, this is a daily time frame, but price is fractal, so we're gonna be facing the same concept on lower time frames as well. So here we in a supply zone, we're looking for sales, and yeah, we're in a supply zone looking for sales, and another confluence is trend. So we are basically expecting market to turn here, but we're not selling based on the trend line. The trend line is just helping us. So as soon as we hit TP, we start looking. Now it's time to go back now. So come here, see we have a nice demand candle there, order block. I'll have a video explaining what an order block is. So we have a nice supply, man. Yeah, we have a nice supply here. Nice supply. And if you see here, price broke this zone we had here, broke this zone, mitigating this one. So we have a break of structure to the downside. From here we had a break of structure to the downside, so that's what confirmed that zone for us. And as a result, price came back, tapped us, went straight down, zero drawdown. But something very important happened here. Something very important. See, price came back and didn't tap and left. Price tapped and left there. So that is what we call inducement. So this is inducement. So here price turned somewhere close to the zone and then created a sell wick, because now they all know, the candlestick patterns, you all know the candlestick pattern, doji. So you are a shooting star. So you get this candle, people start selling, well, you win, it gives you that reaction, go to break even, or you leave it there and you tell yourself, okay, now you're winning because you're going to the downside. What happens next? Market retraces back, takes you out, picks up our limits, and then instant break even. So this right here is what I call inducement. Yeah, liquidity inducement. So this was just some form of liquidity. Yeah, there's just some form of liquidity there. So when price turns just above or below a zone, it might serve as inducement sometimes. So you mustn't be shook. You mustn't be shook. So seeing that we took this trade, we know most the take profit is going to be the opposing zone. Opposing zone is the demand zone. Where is the demand zone? We already done with this demand zone now, so we are targeting the next demand zone here. So price went on, went on, went on. So there is a couple of more trading opportunities here, here, and so forth and so forth. But you can see now the price is almost reaching our take profit point. Time is now. I don't want the video to be too long. 25 minutes. Okay, that's fine. Gives me enough time. So I'll just like test this small area according to the much lower time frames. So you can see here we have a beautiful descending channel here, just like we are in a huge descending channel on channel channels. We are on channel so now if you were a day trader, this is what you should be trading. This is what you should be trading. Going up, going down. Now this is just the channel just shows us the trend. It doesn't tell us to take any trades, it just shows us the trend. Moving on to the 4-hour in the descending channel. Ooh, lot of data there. There's a lot of data right there. So we know we're only interested in the sales. Only interested in the sales. On a down trend, we're interested in the sales. Whatever buys we take, they are very, very, very shortly. So yeah, it's simple here again. Very, very, very simple stuff. So market created this zone here, went down, didn't break, it reacted, went back. We created that zone, broke. That means we have a supply zone here, still not mitigated. Might leave it for future purposes when the market goes back up. And then when it broke that one, came back, gave us this doji here. Let me draw it. It gave us this doji candle, gave us this doji candle, and then unfortunately price didn't reach here because we would have easily placed the limit here, and then first take profit point would be here, but ideally we all know that the take profit point is the opposing zone. But again, that would depend whether you are swing trader, scalper, day trader, for that. And again, we had this beautiful channel happening here, which is what I like to call liquidity, because when price breaks here, it will break that range. So yeah, that's where you must stay away from. So we would take this zone as a demand. It's legal to take this zone as demand, and it's very, very, very. However, we are in a bearish market, so we're more interested in the sales. And since this low created the liquidity pool that was left here by the market makers, we cannot trust that zone. But the highly trusted zone was this one. Unfortunately, price didn't reach there. I think it was a few few pips away from it. How much? It was 6 pips, 8 pips away from the zone, and then it turned back. So okay, unfortunately, that's part of life. It's just forex. Yeah. So price went down. When price went down, that left the zone. Have a supply. There was a mitigation, and here, ooh, this is another one. There's a lot. There's a lot here. I love this one. So you can see, okay, price push to the upside, and then came back to the down. When it broke this zone, when it broke this low, this low, when it broke this zone, it left us this demand zone, which is this demand zone here. I mean the supply zone, left us this supply zone right here, left us that supply zone. Supply, after the supply zone. So whatever we had to do, what we had to do here is to wait for price to come back, give us confirmation to sell, and sell. But okay, if you know it's confirmation, you trade based on a 4-hour again. We have easily just placed sell limit, and then all the take profit is way below. Way below. What time is it? Is at night actually? Hell. So this is a very interesting type of range. This is a schematic. I'll get into schematics in the next videos. Again, here we had a lot of liquidity pool. So whenever you have liquidity pool, you must just know that we are heading towards a highly probable zone, and once we take it out, we will take the whole liquidity, sweep it. So once you enter here on the start of that falling knife, then your TP should be somewhere here. But lucky for us, we're trading supply and demand, so we already know this is the supply that we're waiting for. So when price reaches here, we take our sales, and then when price breaks here, we take our break even, and then price comes back, doesn't tap us, just turns back, probably a confirmation entry, and then it leaves. Sure. And whatever price left here broke this low. So right here we have another supply zone. We are waiting to sell wherever price reaches that zone. Looking for sales anywhere. Don't like your brightness. Don't like your brightness where. Don't like your brightness where. Too bright. Too bright. Okay. So whatever sales we got there, we still moving to the desired demand zone, which is the opposing zone of so can you see that there is to reward ratio right there? That's not true. That is a lie. So if you took this trade, this is a 1 to 1:15 trade. So if you risk 1%, yeah, you're gonna get 15 in return, 15% of the whole account, which it's a fair trade. I mean, it's a fair trade. Anything 1:10 at least, yeah. At least you know you're gonna get back 10% of your account from each trade, so that should be fine. But it's a topic for another day. It's a topic for another day. So the reason why I am not counting this as a demand zone that I would trade personally, it is because we are in a bearish market and I am swinging Euro USD. I'm not day trading. However, if I were a day trader, I would mark this as a demand zone simply because it broke this high, it basically broke everything that's on the left here, broke it. And this is the origin where the whole move originated. So when you come back here, we're looking for buys. So let's say we take buys, and we put our stops there. But now you see the issue becomes this: the take profit point would be the opposing supply zone. Take profit point would be the opposing supply zone, but when you're in a bearish market and you buy, price takes much longer to come back to that wanted zone, and sometimes it doesn't even reach. Just G comes, traces, and then sorry, excuse me, price just retraces and then just continues to go down. So that's also a possibility. Sometimes you had even hidden supply, hidden demand zone in one leg. So it all just it depends. It depends, but I just don't like taking counter trend trades. If you take it, then you should know, okay, you're just aiming for a 1:10, 1:20, just to capitalize on that day and then close your trade. So for instance, this one, I'd probably close it right here. I'll close it around these candles here. I'll just take all my profits, or as soon as I see a huge retracement, I take a profit, because I'm not really interested in this. I'm interested in that, so that I might not get or get, no one knows. So yeah, that is where we currently at now with Euro USD. Actually remember taking a trade here on a lower time frame, but yeah, for now we had an impulse, we are having a correction. Probably we will get a sell here, because this is rally, base rally, meaning we left the supply zone here. That is gonna give us continuation trades. So currently I'm waiting for price to reach here, so that the price gets here, confirmations, and then we take the aim. Otherwise, that's it for today, guys. I want to make the video too long, to 40 minutes. Please feel free to comment on the comment section. I will reply to each and every one of you guys. I will try to assist in all ways that I can, and I will try to explain all the concepts that I've mentioned that you don't understand. Just leave a comments, and yeah, that's it for today. See you guys in the next video.